Good afternoon and welcome to today's webinar, From Cost to Profit, Integrating Battery Storage with Site Operations for Cost Reduction and Revenue. At a time when energy markets are becoming more volatile, grid constraints are tightening, and new commercial opportunities are emerging, organizations are being forced to rethink how they manage energy on site. Battery storage is no longer just about resilience or backup, it's rapidly becoming a strategic asset with potential to deliver both operational and financial value. In today's session, we'll be exploring how battery storage can move beyond a simple capital investment and start generating revenue without disrupting core operations. We'll look at how organizations can integrate storage into the wider energy strategy to reduce costs, improve stability, and unlock new income streams across multiple energy markets. I'm joined today by two experts who are working at the forefront of this transition. From ABB, we have Alexandra Hope, Global Senior Consultant in Energy and Carbon Electrification Services. And from GridBeyond, we're joined by Adam Kenneally, Head of Portfolio. Together, they share practical insights into why battery storage is becoming a commercial necessity for energy-intensive organizations, how revenue stacking works in practice from capacity markets to system services and wholesale optimization, and the critical role of automation and real-time control in maximizing returns. We'll also cover the practical steps you can take to access your own site's potential and build a commercially viable battery storage strategy. Also, today's session is hosted by myself, Tim McManan-Smith, and I'm delighted to have you with us. But please do use the panel on the right to log your questions for me to put to our guests at the end of the session. The session is recorded, and will be made available along with the slides afterwards. So let's get started, and I'll hand over now to Alex Hope. Over to you, Alex.
Good afternoon. It's very nice to be here with all of you. Thank you for joining. Tim, if we want to move the slide over. Perfect. So as Tim said, we'll be discussing from cost to profit, how we can couple energy storage solutions on site to shift and help on your different applications. So I work within ABB's Energy and Carbon Services team and want to give just a brief overview as to who we are. So we are hoping to be your partner of choice to help you achieve your net zero emissions targets through innovation on our electrification and decarbonization offerings. So we deliver outcomes that ultimately help you all outrun the challenges associated with the energy transitions. Today, I'll be focusing on electrification and decarbonization solutions and how we implement those on site to ultimately help you. Next slide. So why are we here? We are all being bombarded by basically what we call the energy trilemma. So as commercial and industrial end users, you are now trying to balance power, pricing, and also making sure that we maintain a sustainable planet. So how do we address energy security? You need to be able to make sure that you are going to have continuous and stable power supply to make sure your operations can run reliably. We also want to make sure that that energy is affordable. So how do we either lower your energy costs, balance those energy costs with revenue, or look at firming up those energy costs over a certain period of time? And then in addition, we obviously want to make sure that that energy that we're consuming and or generating on site is sustainable. So bringing together these three challenges is what has led to the creation of our group, Energy and Carbon, and the work we're doing with GridBeyond. Next slide. So just to give a little bit of context as to some of these challenges that we're seeing that our customers are experiencing, every day, unstable energy is causing disruptions to our customers. And these disruptions can either lead to costly impacts to the bottom line, they can affect your operations and your output, and they can also affect sustainability targets that you're trying to meet either at a corporate or a regulatory level. So we see some data centers outages can cost them over $500,000 per hour. We are working with clients in oil and gas where if you have even a 1% in downtime, it will cost those operations over $5 million annually. And then same, we have industrial sites that are contributing up to over 30% of global CO2 emissions. So when we looked at that energy trilemma, how can we save on the energy that you're using? How can we make sure your operations are running reliably by having secure power? And then how can we also reduce the impact that we are having on the environment and the planet? And then as we see these challenges with traditional industries, but we also see new technologies coming on board. So as we see e-mobility applications being rolled out, whether that's roadside charging or existing sites adding fleet charging infrastructure, it's really impacting the load that we see at the edge of the grid, which can cause congestions, blackouts, which ultimately rolls upstream and affects other customers and other users on the grid. Next slide. So, why we think energy storage is a game changer. It's the ability to address that energy trilemma we started the presentation with. So, how can we ensure reliable power? An energy storage system is able to store energy for use during peak demand or outages. That allows us to provide consistent supply. It also reduces reliance on external sources or fossil-based sources. We can provide that backup power. We can also help support voltage sags or power quality issues coming to your site as the end user. So we're able to help with that power and energy security. We want it to be reliable. We want to make sure that the power or lack thereof is not impacting your operations and ultimately your ability to be profitable and deliver to your customers. Energy storage also allows us to drive cost efficiency. So we're able to reduce energy costs by shifting, right? We can store when the prices are cheaper and then use that energy that's been stored during peak times. We can reduce your peak demand on your electricity bill. So we have the ability by partnering with GridBeyond to look at the peak demands, how your tariff structure, how your tariff schedule is structured, and then optimize how we use that best to really impact your electricity bill savings. And then on the flip side, we're also able to, depending on your location, leverage energy markets to actually use that asset to generate revenue while still helping you on that power reliability or your backup power side. And then, of course, it also helps accelerate sustainability. So by having an energy storage system on site, it really allows you to leverage any potential on-site generation. It gives you flexibility to make those assets, such as solar, dispatchable. It allows you to store excess generation instead of curtailing it. It allows you to leverage potential carbon credits and other value streams that you can get from those renewable assets. So we really see energy storage as an immediate way to address that energy trilemma and to help you all maintain profitable and reliable operations. Next slide. Perfect. So just taking a little bit of a step back, so we talk about energy storage, and most of the applications that we see are driven by the battery technology, particularly lithium ion. We do have the ability to look at other technologies. It's very much application driven. But where are we as ABB seeing batteries being utilized, and where are we working with them already? So this isn't a new technology for us at ABB. Obviously, we're providing UPS systems, so uninterruptible power supply in data centers. It's allowing them to hit their uptime and online time requirements from an operator's perspective. We are supplementing diesel engines with battery systems at mining sites. So we're really able to reduce the amount of time that you are burning diesel fuel in different remote locations and for backup power applications. We are electrifying transportation networks with traction batteries. So when you get on those rail systems, there's actually batteries on those cars that we are working with the operators to install. Allows you to not pull from the grid in certain cases. We are decarbonizing marine and port operations with battery deployment. So how do we shift onshore power from fossil-based generation or potentially grid networks that are congested and can't support, we can leverage the battery technology there. And then as ABB, we have a large R&D department that is doing all of the development, research, testing of today's technology in addition to what we see as the technology of the future. And then, of course, as ABB, we have decades of BESS expertise. So from stationary applications, going all the way back to the late 90s, doing grid support and stabilization projects. So ABB is very familiar with the battery technology and where it makes the most sense to help you with the challenges you're trying to address. Next slide. So when we talk about energy storage, and you as the end user, you are running a large industrial facility, there are different ways to think of energy storage deployments and how they can be used. And classically, you'll hear front of the meter applications or behind the meter applications. The beauty of an energy storage system, and by partnering with GridBeyond, we are able to install an energy storage system behind the meter. So at your facility, we don't need to work with someone else to get access to land or interconnection. You have all of that existing, but we're able to leverage front of the meter services or applications to ultimately benefit you. So when you hear front of the meter, it's probably being related to energy arbitrage or firming or generation support, grid stability, maybe power quality or mitigation support, or black start capability. We are able to provide all of those front of the meter services with a battery installed behind the meter at your facility. And then actually behind the meter, how are we supporting your operations? We're able to help you integrate renewable integration if you have any or plans to install that. As we discussed earlier, we can help with cost optimization. So we can look at peak shaving, look at your tariff schedule, see if we can help with that electricity bill. And then of course, by leveraging those front of the meter applications, we're actually able to generate revenue with that asset to support the cost reductions we're trying to hit on your bills, and then provide reliable backup power and also support any sort of EV infrastructure that you may be wanting to install. If your facility has been in operations for 50, 60 years, the incoming infrastructure probably wasn't designed to electrify your delivery fleet. And so we can help support all of those sort of upgrades that are being driven now that maybe weren't taken into account when the facility was designed. Next slide. So what is our offering when we talk about all of these great stacks and applications we can put on top of each other? So we have the ability to shift the investment from a cost, a CapEx, to an as a service. So it's what we call BESS as a service. We are able to provide those three solutions we discussed: energy reliability. We finance this for you. So the journey, the deployment is something that is more of a finance solution, whether it's an annual models we can look at, but it still allows you to hit those operational and sustainability targets that you have. So I'm going to look at a couple of examples, and then I will hand it off to Adam to really get into the meat of how we're able to do a lot of the cost savings and revenue generation and sort of energy optimization with the assets. So here's a few examples of how the BESS as a service can be leveraged at different sites. So this is a business park. It was a commercial business park in England, and they had an existing solar system, and the solar system actually was generating excess solar, and they were having to curtail it because the loads weren't high enough. They had too much solar being generated. So by installing an energy storage system, we're able to continue to reduce their electricity bill. So the solar is being generated, covering the load. That excess solar, we're able to shift to another time of day. And then we're also able to generate revenue. So we're saving money. We are allowing them not to have to curtail their solar, which gives them a higher level of utilization of the solar. And then we're also able to generate revenue from providing grid services. So overall, it was an economic decision for the customer. the ability to save, make money, and not have to curtail PV were all of these targets that they had for them. In addition, there was no CapEx or cost upfront from the customer. So I think this is a good example of a bit more commercial focused, a business part of how this technology can be leveraged. Next slide, Tim. Perfect. So then how does this work with EV operators? So think charge point operators, roadside charging. A lot of the challenges we're seeing right now are associated with interconnection, either capacity or approval. A lot of distribution, like end of the line distribution networks, just don't have the capacity at the substations upstream to support particularly fast charging. So high power fast charging. And we want to be able to find sites that are near the electrical network so they can get that grid supply, but they're congested and they're not able to get the capacity they need. So this customer was looking to deploy the fast chargers. The capacity they needed was 600 kilowatts and the grid connection was capped out at 150 kVA. So we needed to look at energy storage basically to provide that peaking capacity that they weren't able to get from the grid. So this is another example. They were able to increase their revenue by not curtailing the charging ability due to being restricted by the grid. And it also was able to save them $200,000 a year in energy costs because we were able to make sure that based on their tariff schedule, they weren't getting peak demand charges while the charges were being used. We have two more quick examples and then I'll hand it over. Tim, if we can go to the next slide, please. So this is a really cool example that I like. So we've talked a lot about cost savings, revenue generation. This customer's priority was really to reduce their CO2 emissions and footprint. And so you can implement technologies that do that, but we want to make sure we can actually track the savings, right? This is something that can then be put into your ESG reporting and is really required all over as scope 1, 2, and 3 emissions are being tracked and are having to be reduced. So for this customer, we were able to track the amount of CO2 that was reduced by using on-site generation, by on-site PV generation, by timing. We have the ability to know if there are more renewable assets on the grid at a certain time of day versus fossil-based generation on that distribution or transmission network. So we're able to charge the battery during times when there are higher penetrations of renewable energy. And then we're able to track what that CO2 savings is by charging at specific times. And once we were able to pull all of that together for the customer, it was a 73% ROI for them, and they avoided over 90 tons of CO2 per year. By also having that battery asset on site, we were able to provide backup power in case of an outage. They didn't have to turn on the generator, CO2 savings, and obviously it provided cost savings by reducing their spoilage and production losses. So hopefully you see every case, next slide, Tim, every case is a little different. All of your operations, challenges, where you're located are going to feed into what is the best fit for you. So I just hope that you sort of take away, if any of these challenges or topics are something that you all are trying to address, we're really happy to work with you. The really sweet spot of this is if we're able to also leverage behind the meter demand response or front of the meter services, which is where our partner GridBeyond comes in. So I will hand it over to Adam so he can get deeper into those topics. Thank you.
Alex. Hi Tim, can you go to the next slide? Thank you. My name's Adam Kenneally. For those of you who don't know me, I am head of portfolio for GridBeyond in UK and Ireland, and I manage our larger accounts, key partnerships, and support on some of our worldwide partnerships. So hopefully I'll get to talk to some of you behind the screen down the line soon. And again, for those of you who don't know who GridBeyond are, we operate across 4 continents. We partner with energy users, generators, fleet operators and renewable developers to really unlock the full value of their assets. So how we do this, we combine market insight with advanced optimization and EMS capabilities, and we help our partners, our clients, uncover new revenue streams, reduce energy costs and operational spend, and accelerate their sustainability goals. So if I was to outline in one line what we do, we're all about turning your flexibility into value and making sure that every kilowatt, every megawatt is working as hard as it possibly can for your business. The markets we're in are primarily the UK, Ireland, Japan, the USA, and Australia. And why we're partnered with ABB, we ultimately can deliver proven expertise across all of these markets, be it front of the meter assets or behind the meter assets. We have been optimizing batteries for over 10 years, which again doesn't sound like a long time, but in batteries, it's almost 100 years in some ways. We're there as technology changes, as market changes, and we've seen batteries that have come to the full end of their power cycle and continue to provide value in those as well. Okay, next slide, Tim. Again, a little flavour of the services that GridBeyond provide to not only to ABB but to our clients around the world. As we discussed earlier, we are virtual power plant, providing flexibility across all of the wholesale, ancillary, and capacity markets that we operate in. Combining alongside this, we provide optimization across your processes, identifying how you can do what you need to do in the most profitable and cost-saving way. We do that with our SaaS and with our forecasting, with the optimization and solver tools that we've got across every industry. Why we work with someone like, why ABB, I suppose, would work with someone like us and our clients work with us is within battery and solar, we've got detailed EMSs deployed across the world. We've got experience in really creating full value across assets that are either CapEx, assets that you may need to fund or need support funding. We support from designing projects with clients right up to the connection and the monetization. So really the full life cycle of batteries. And again, the next two, I won't spend too much time on, but once you have your assets, once you have your flexibility identified, we can then take you on the next step of your renewable journey. That could be from PPA, identifying opportunities in the PPA, a CPPA for your business, or if you're an asset owner, finding off-takers for your generation. And again, the 24/7 carbon-free, the power matching, it's a service that's growing and growing within our customer base, particularly the customers that are RE100 or really focused on, I suppose, walking the talk on their renewable goals. Yeah, we help them to make sure that the investments they're making within their renewable technology equals what's occurring within their site operations and matching those up. Okay, Tim, we'll go to the next one, please. Okay, and here's a bit of a flavour of our customers. Now, if you were talking to me 3 or 4 years ago, our customers have been dominated by the cements, the quarries, the chemical customers, like almost to 100%. The big energy users that could take advantage of grid services and take advantage of flexibility within their process. And those still are a huge part of what we do and some of our key customers. But I'd almost cast your eyes across to where there's other opportunities that are really growing. I look at the domestic side. The domestic side on the right-hand side, we've got multiple megawatts in these markets now. Batteries that wouldn't have been able to enter market a few years ago. We're right down at 20, 30 kilowatts. Now, as an aggregator, we put those into market and we create revenue for those ones. Commercial, multi-site retail is another one that's really growing, getting a lot of interest. But as I said, the the single sites do still dominate what we do, still really important to us. And yeah, glass companies, heavy industry, manufacturers, the kind of customers that Alex talked about for particularly for resilience that's required in their sites, we can then support them with what they do operationally now. And as they add renewable technology such as an ABB battery, we can monetize and make sure they get the absolute most out of those investments. Next one, Tim. Next one as well, please, Tim. Thanks. Now I've got a few slides with a lot of words and a lot of boxes, but I'm told these slides are available afterwards, so I'll rush through them so we've got some time for questions at the end. But ultimately, I think one of the questions we're often asked is, how do we do it? How do we create value? And if I focus on a site with a battery, this is how our platform and our optimization within financial markets works. So if you look on the slide here, across the top of it, you'll see a number of the TSOs that we are involved in. So you'll see National Grid for the UK, various US markets, including ERCOT and the PJM, Octo in Japan, and EirGrid in Ireland. So we're linked into all of those grids, all of the revenue opportunities, both at the highest level of the grid and others within the local DNO side of it. So within those markets, you have ancillary markets, you have capacity markets, and you've got wholesale and real-time markets. Now, wholesale and real-time markets, particularly in the UK, are really only available for front of the meter assets or generation or generator assets for the last 2 years or so, behind the meter assets. So businesses with batteries behind the meter, businesses with load behind the meter have been able to access these markets. And I'll take you through on this graph how we allow customers to access these markets. So if you go right down to the bottom, you'll see the aggregation level of it. So in this model, you can see that we can aggregate single sites, we can aggregate sites with, on this example, batteries and EVs, and the example next to it, we can do battery, sites, EVs. So we aggregate these loads, whether they're small or very large, into optimal units. These units can then enter the wholesale, the ancillary, and the capacity market, generating revenue for the customer within the constraints and within the way that they work as a business. Now, what's quite, again, an exciting development, if you look to the left-hand side, is for some assets, if they're, for example, EVs, if they're residential batteries, if they've got the right setup, we can actually communicate directly with these assets and get them into a number of markets. Potentially not as many as we would do if we're aggregated with our technology on their site, but we certainly can have options for smaller loads. And how does it work? So our team, I probably should have said on one of the earlier slides, we've got about 160, 170 people within GridBeyond. The vast majority of them are smart people, much smarter than me, who deal with forecasting. They look at the renewable markets. They look at the load forecasting across all these sites, then create units, create opportunities at the highest value for our clients. So this slide is almost entirely focused on the revenue from markets. What we will do as a business once we've identified the market forecast, the renewable forecast, and the load forecast of our clients and the batteries that they would have, is we then look at optimizing the bids, look at potentially the process of those sites to create extra flexibility and extra revenue and savings for the clients, and we execute the trades to create the revenue. And probably again, then the most important bit is we manage all the settlements to make sure that the flexibility that they do, the flexibility that they create is rewarded. So yeah, so brief summary of this slide is we will aggregate your load into bigger loads that can create more value within the markets. So again, focusing a little bit more on the ABB GridBeyond relationship. Typically, a few years ago, a site may just have a battery or it may just be dealing with a DSR. And quite simply, if we can combine it just from a financial point of view, we can create a bigger load for the site that can enter more and more markets, and that can create more and more revenue. So for a typical megawatt, we can create about £72,000 per annum on a battery and about 64 on a demand site. So that would be a factory or a furnace, etc., etc. Therefore, bringing your site just from a pure finance, almost doubling the financial opportunity on a site. Now, again, depending on how big your battery is, depending on what part of the country it is or what territory it's in. I mean, there's some countries, like, for example, if you've got a battery in Japan today, then the way the market's set up, then they're very, very profitable. So again, these are typical numbers, but within your project, even before you buy a battery with ABB, we'll work with ABB to make sure that the numbers that you can earn financially are really clear. Next slide, please, Tim. Yep. Yeah, thank you. I just wanted to take a couple of slides about probably the challenges that we're working with ABB to resolve. I imagine a lot of people on this webinar have already deployed solar, may already have some flexibility in their site, and are looking at how they import the grid and looking at the energy prices, what the opportunity is, as well as obviously looking at investing in a BESS. So what we find often is that stuff's happened in silos, stuff's happened piecemeal. So you might have a solar, you may even have a battery, but they're not connected, they're not working together. There's competing priorities across your site. Energy management can be reactive, so they can't forecast the benefit of each of the assets that you got on the site properly or in as much detail as we'd like, and values being left on the table. And then across the site, particularly what we traditionally do with the flexibility of industrial sites, is your solar or your BESS that you put in has created additional flexibility that's not being maximized. And there's no clear route. If there's someone not like GridBeyond involved in the project, then the route to that revenue perhaps isn't mapped as well as you'd like it to be, or as clear as it should be. And again, companies potentially leaving value on the table. So as you can imagine, the next slide is the solution to it. So Tim, if you could move it on, please. Yeah, so we would, within our technology, we would add an energy management system. We put those in conjunction with our partners, such as ABB. They will provide real monitoring, real-time monitoring of your load, EVs that you've got on site generation, and obviously and stuff across your generation as well. We also look at the forecasting and predictive control. We'll put things like the weather, pricing, and load forecasting. We'll put local information into your site, so you've got the correct solar output, for example. We look at the battery science, and we'll really see if we can create almost island modes of all of the investments you've made, so you can come right off grid. You can hugely reduce your carbon footprint and hugely reduce your energy costs. So the benefits of bringing the grid technology alongside the technology such as ABB is you'll have lower energy procurement and energy costs. We already do it, so it's pretty much plug and play. And we would target and we would expect and we deliver higher self-consumption of your renewables. Okay, the next one, Tim. I'll just give two examples, go a little bit deeper into the more specific example that customers talk to us about. Oh, actually, I'll do this. This is a little view of again what working with GridBeyond would look like on your site, particularly if you've got multiple assets. So we'll register and manage all of your assets. You go down along the bottom. So we can look at EVs, solar, your gensets, batteries, heating and cooling across your site or your social housing, and look at the flex load. We will install our technology on your site. So we'll provide local control, and we'll also provide access to our optimizer. Our optimizer will orchestrate the site for the best output. Again, we will look at what your goals are, whether the highest revenue, whether you want to maximize self-consumption across your site, minimize imports. We'll also look at potentially giving you the highest renewable performance you could have from the site. So that could be utilizing the battery after the solar. So again, it would be working with you, not potentially to create the highest revenue, but it could be to create the highest savings across your sites, or kind of present the opportunity or the goals that you want for your site or your client sites. Okay, so let me run through that slide very quickly. So again, sorry, Tim, here back again, please. So just a reminder, we will optimize your assets on site without our technology. We'll provide cloud control plus local control. We'll optimize them for how you want it to be optimized, and then we'll deliver it and give you visibility of what we're delivering. Okay, Tim, you can move on now, please. Yeah, and again, here's just some small use cases, some clear use cases, but a big part of what clients want to do with their microgrid or their battery is to reduce the demand based on the highest kilowatts in the billing period. So again, we can look at the peak demands, whatever the structure of your energy tariff or the way you buy energy, we'll place that into our solver and optimizer, and we'll make sure that the exposure to these pricing, again, particularly in markets where the prices move very quickly, such as Australia, the US, and there is a lot more risks and opportunities with the way these prices move. We'll manage that so that your costs are reduced, your payback is increased, and your exposure to high pricing is dramatically reduced. Next one then, Tim. Yeah, and this is a favorite and one that's growing more and more prevalent in all our markets. What we do find is that clients may have already invested in solar before they invest in a battery or in a microgrid. And what's occurring, I mean, I look at some examples like some universities that have got solar on the roof and no battery. It's the hottest time of the year where the biggest energy load is in the summer. There's less students, for example, at the university, and a lot of the solar is leaving the site for no benefit or for zero benefit, or the solar is just being curtailed. By working with someone like ABB and GridBeyond, the battery can be used to capture that excess solar. So we'll set it up to make sure that you're getting higher value from your solar PV assets, reduced reliance on grid imports as we'll then send the captured solar back to the site at night. So again, lower costs, improved sustainability, and improved emission performance. So again, these are benefits, as we went through, that are relatively straightforward to layer on to what you're doing in your site, and it makes the sites and the assets you've invested in not silos, but orchestrated and running together and creating a maximum revenue value from the wholesale and the capacity markets, and also creating big impacts on your invoices that you're paying to supplier and big invoices on your spend. Okay, I think, is there any more, Tim? I can't remember. Oh, there's another one. Apologies, everyone. So again, this is how we can orchestrate your entire site across a day. So the EMS will bring all of your technologies to bear in a flexible manner that will allow you to potentially we look at this example. So charging your battery, EVs, etc., off peak, potentially using excess solar if it's available at those times. In the peak, again, maximizing solar self-consumption and collecting excess power. In the high period, If we've done it perfectly, you can either use the energy that's been charged off peak or charge from excess solar during the day and really hit the peaks with your battery, reducing your major costs and getting payback on your battery and your investments a lot quicker. And again, mid-peak, when it's medium cost energy, we can look at your flexible load, look at how we optimize that, both to enter flexibility markets and to provide energy management benefits across the sites. So yeah, so with our technology, we can orchestrate all of your technology within your goals, and it's done automatically. It responds to what's happening locally on site and what's happening on a more macro level as prices across the wholesale markets and the ancillary markets alter. Next one, Tim. If there is, that's fine, Tim. We don't need these, the appendix ones, so we can finish it there.
Great. Sorry, I had some feedback that I had two machines running. Thanks for that, Adam. If we can have Alex back as well, then we've got some questions coming through. To start with, actually, I'll just put it to you, but is there a business model or current offering that would easily sit with an energy performance contract for SMEs looking to decarbonize without access to upfront capital?
I apologize. Yeah, go ahead, Adam.
Sorry, I mean, obviously, without speaking out of turn, Alex, that's one of the opportunities that Alex's business would offer, without potentially an upfront cost if the model worked for, and if the energy as a service model worked for that client. And beyond that, if it was not a project that was in ABB's wheelhouse, then SMEs, then there is people who would fund SME smaller batteries if that was correct. So yeah, definitely ABB would look at it, and if it wasn't correct for the customer in ABB, then there's potentially other options in the market for the smaller batteries. So SME, I'm presuming that they're talking below 100 kilowatt batteries. If that's the case, these are, as I said, probably in our slides earlier, that type of battery was difficult to work with. Now with the aggregation rules, with the potential of the battery being COP11, then those batteries can enter markets a lot quicker and create a lot more revenue than they could do a few years ago. So without saying yes or without saying no, definitely it's something that we could definitely look at.
Yeah, I think it becomes it's a bigger conversation around what are you trying to accomplish with the asset. So is it purely to generate revenue and bid into the market? Well, there may be size constraints, as Adam mentioned. There are minimum thresholds depending on the market. We are looking in certain cases at aggregating smaller assets to then have them be scaled up to meet those requirements. But it's a little bit more nuanced than just aggregating a bunch of smaller batteries. But I think it gets back to, again, what are you trying to accomplish? Are you installing a smaller system because it could just be an issue of scale, and really your specific driver for installing the asset. And then, yeah, I mean, there's no size restriction per se. It's more of making sure that there's value that we can generate and ultimately quantify with you as the end user to put into the business case.
This is a quick one for you, Alex. It said presumably zero export permitted at that English site, right? I assume they mean the English example you did for the BES site.
They had minimal export, so they did have export capacity, but it was less than their import capacity. So again, that's why I said every site is different. We need to understand if there's export capacity. We are working on a site in the UK that has no export capacity, but we're still able to generate some of those front of the meter revenues by using the battery to almost displace the load so that the grid sees what looks like an export onto the grid.
What is the minimum battery size required before it can be utilized as a revenue stream via managed optimization?
Adam, I think right now it's 1 megawatt.
Yeah, no, sorry, 1 megawatt is the size of the unit, but if you were to have 10 100 kilowatt batteries, that creates a unit. So the size of a battery, we're right down at like 20 kilowatt batteries.
But they'd be aggregated up to them.
The aggregated up, yeah. To enter most schemes, you need a minimum of 1 megawatt. So that's I suppose, the benefit of working with someone like GridBeyond is that we can aggregate you with sites to make sure you hit the thresholds to enter markets.
What challenges do you face when it comes to system integration? And 2, what is the typical time frame from contract to operation, including necessary approvals?
I'm sorry, Tim, you cut out for a bit. Can you repeat
Oh,
that,
sorry.
please?
So what challenges do you face when it comes to system integration first? And then what time frame?
Yeah, so from system integration, because most of these projects we're installing these systems at existing facilities, there's existing electrical infrastructure. So the first thing we need to do is make sure that the existing infrastructure can accommodate this new asset, this new generation load source being connected. It's as simple as sometimes the current ratings, like the bus bars, aren't sized to handle the amount of current that we need to push through. So I wouldn't say it's just things we need to check. And if that's the case, then we would look at upgrading some of that infrastructure or installing a new dedicated low voltage or medium voltage switchgear system that can then integrate with the existing infrastructure. So understanding the existing infrastructure, making sure we can interconnect. If we cannot, then providing the interconnection infrastructure, which again is not a challenge, it's just steps we need to go through. In addition, making sure there's footprint and space availability. So, again, if this is an existing site, where would we locate the asset? How physically we would be working with GridBeyond, we would propose, a sized asset, and then there may not be enough space on site. So making sure that we're taking that into consideration as well. And
what's the typical time frame from contract to operation, including necessary approvals?
From contract to operation, it's going to be about 9 to 15 months, depending on the size of the asset and any potential delays. So as a part of our scope, we obviously go through the interconnection process and we work with the DNO. We get any of the permits that are required. We're providing the full turnkey solution, including like civil works, as I mentioned, the electrical infrastructure. So that's a pretty good range, 9 to 15 months. Of course, some of those approvals may be out of our hands, which could cause some delays.
Did GridBeyond size the battery and model forecasted revenue?
Yes.
Yeah.
Yeah, so they size all. Yeah, fine.
So there's a few levels. What I spoke earlier about making sure we understand what you're trying to accomplish and what that priority is. So if your number one driver, for example, and we're working on a project where this is the number one driver, they want to have backup power for an hour. That's the first block that we have to make sure we always have that hour of backup capacity. And then we've sized additional capacity to generate that revenue. So in this case, the battery is actually larger than what it would be if we were just generating revenue for the customer. So that's why it's really important to prioritize what you want to do. And then we work with GridBeyond to make sure we're maximizing the revenue while still meeting what may be a different priority number one.
Yeah.
Who carries the risk of system operation, e.g. technical failure leading to a site outage?
ABB.
That's a very quick answer. Yes.
Yeah. No, so our goal really is to have a de-risked offering for our customers.
And this is similar. Sorry, the similar question is who owns the infrastructure and how's it disposed of end of life, sort of similarly.
So ABB owns the infrastructure. At end of life, we can either do a transfer of ownership or we also include the decommissioning and removal of that equipment. So it really is a hands-off experience for the customer. We don't want any gotchas. There's it's completely de-risked from your perspective.
Okay, for a 1 megawatt battery, what would the monthly stroke quarterly subscription cost look like?
It all depends. So 1 megawatt just dictates the power. So we would first need to understand what the application is. What are we using the battery for? Then we would size how much capacity. So is it a 2 megawatt hour battery, a 4 megawatt hour battery? And then we would look at the different value streams that it is bringing to you. So the revenue piece, the potential energy savings piece, is there cost savings due to preventing an outage? And then we would stack all of those and then balance that with what the sort of annual service fee, and we can look at different ways of actually contracting that with you. So there's never like a black or white answer in these situations. It's all application and site specific. But happy to look at an example with you offline. I'm not trying to get around answering the question.
There's an interesting one coming here. It's apart from peak stroke red GEOS avoidance, capacity mechanism avoidance, November to February, and wholesale arbitrage trading, charge cheap, discharge when markets are high. What are the other revenue streams available in the UK?
Yeah, so we've got multiple schemes in the ancillary market, and response market. So you can get contracts for the capacity market for up to 4 years to pay you to be available to support the grid. For a battery specifically, we've got all the dynamic services. They pay up to about £60,000 per megawatt per annum. And we also, alongside the three tariff examples the person just gave there, sites can now enter the wholesale markets and trade on those. So we can take the flexibility in the batteries that Alex and the guys provide, and we can trade them within the wholesale market to add an extra revenue stream. So beyond tariff savings off your energy bill that the person just described, you can get contracts with National Grid to provide flexibility to grid, and you can enter the wholesale market. So they're the three distinct revenue stacks.
Mm-hmm. Another one here. Are considerations taken for clients who are on half-hourly / hourly settled import contracts to ensure that they're not incurring a net loss from the sellbacks to market from the import contract?
Yeah, so when we look at the strategy as to how you can best optimize your site, your battery, your connections, your MICs, your MECs, we'll run through with the customers, and all of the constraints will be put into our solvers and optimizers. So the strategy that you would follow would be limited by the risks that you have from other parts of your operation. Ultimately, what we do, GridBeyond do, is to provide routes to create savings or revenue. But obviously, will be removed from the strategy.
Okay. It's similar, actually, probably for you, Adam, but it's what kind of markets do you have experience working with? Day ahead, intraday, balancing, etc. What about seasonal load variations?
If that's for me, yeah, we're familiar with all of the intraday, post day. I mean, you look at season aheads and stuff like that, it's not that relevant in the sense of, I say it's not that relevant. Most of the value is on the short-term curves. So most of our value is made on day ahead or intraday. But absolutely, when we look at how we've managed someone's tariff, how we've managed their savings, their bills, its structure will be put into their strategy and into their optimization and to within their constraints.
Here's one that says the schemes that are being leveraged are dictating the use of the battery and thus its life expectancy. What flexibility is there for future changes in the grid schemes, site demand, etc., etc.?
Yeah, do you know, that's on me. I probably wasn't as clear on that. The schemes can be charge as well as discharge. So you've got a negative and a positives in most of the flexibility products. So you can actually be in a negative and a positive. So a charge and discharge. And that will be part of the revenue stack for you as well. So yes, you can make money, or you can create revenue opportunities in your charging, as well as discharging.
How is the increase to NUOS charges impacting these revenue streams, so the transmission charges?
It depends how you do it. I mean, a lot of it is if you're charging the back, you can charge within certain products and have a reduction in and have a reduction in some of those fees, or you can, rather than discharging your battery, if you've got export away from your site, you can discharge your revenues onto site. So you're not paying it twice, and you're not having any impact on your non-commodities. So again, not hugely, to be honest, because the energy will ultimately be used by the site or create revenue for the site.
This was where was there was one that was just wanting roughly what price per megawatt hour installed. Just could you repeat that? It was saying.
I didn't give an answer. There's not enough. There's too many unknowns. Yeah, there's too many unknowns to provide an answer for that.
He's tried again, Alex. He's tried again.
Yeah.
No, I'm not trying to avoid it. There are too many. First off, we don't even know the energy capacity. Is it a 1 hour battery or a 4 hour? That's going to be a four times the price, basically, if it's a 4 hour output.
And probably that's relevant in all of the projects that we deal on together is, do you have connection constraints, connection restrictions? Do you have to pay the DNO to reinforce the network? That can have impacts, both positive and negative, on your projects.
How do you factor in battery degradation into the size of the BESS for the capacity market?
So we work together with GridBeyond. We have our solutions, and we feed to GridBeyond what the degradation assumptions are, the efficiencies are. So I think of those as like our operating parameters, and then GridBeyond feeds those into their model to make sure that it's precisely based on the operation of our asset.
Yeah, it probably should be said that when ABB work with us on putting some of the project together, we do put like 15-year cash flows that take into account reduced performance as the battery gets older, and potentially when it might need to be the cells need to be replaced. So that's all in the initial modelling before with Alex and the team.
Yeah.
I'm not sure who this is for, but can you give a rough split of the different types of clients you're working with for the GridBeyond solution?
I mean, for both of us, I would say we're really focused on heavy industrial customers. So Adam went over what all of those cement, glass, steel, big heavy manufacturing sites. From our perspective, ABB, we can bring value with their electrification. We can help with some of their corporate initiatives that may be coming down. But because they're also heavy energy users, they probably have a larger interconnection capacity and the ability to really monetize the asset. So I don't know if you want to add to that, Adam.
No, I'd say where we've the customers that we work with, as we said on my slide, we work from the heaviest of industry, so coma sites, tier 1 sites within the UK, right down to social landlords with 20 kilowatt batteries. If there's flexibility, we can see it and optimize it, then we'll optimize it. So we work through, there's not many parts of many sectors that we don't work in now.
There's one about hybrid connections on installed generators. How does the grid connection work, sharing assets and connection charges?
I have to take that away to someone. Let me take that question away, and I'll get a proper answer from our regulations team. I've got an idea, but I do want to. I'm on camera here, so I better make sure I get the right answer to him or her.
Can relatively small diesel standby generators, say 50 to 200 kVA, be included in a hybrid system with a battery storage and solar PV, etc.?
Can you say that one more time? I apologize.
Can a relatively small diesel standby generators, say 50 to 200 kVA, be included in a hybrid system with battery storage and solar PV?
Anything can be included in a hybrid system. Yeah.
And
again, we could even look at, or go ahead.
Sorry, Alex, you finish.
I was going to say, we could even look at sort of base loading that generator. If the hybrid system needs something to provide base load coverage, the energy storage system can actually allow you to output that generator at its peak efficiency, which I think is like 85 to 80%, 88% of nameplate. So while we're burning fuel, we're burning it at its most efficient rate, so we get a higher level of utilization, and then we can use the battery to handle if the load goes below what the output is or higher than the output, and then also allow us to integrate that solar. So yeah, hybrid can be whatever we need or whatever you have.
We are running low on time, but any last minute questions, and do get them in. But just whilst they are there, we hear often about optimization, but in practical terms, what does a good optimizer do differently? And that's just for myself.
Yeah, I suppose when I looked at the EMS, or when we talked through what a site looks like, there may be an optimizer might look at assets individually on your site, not take into account the whole spread. And then an optimizer might not take into account the whole flavor of the site. Is there more assets that can come in? We have, with all our customers, we have engineers go to site, walk around the site, identify the opportunities on the site, cost the opportunity on the site. And I suppose I imagine most optimizers do this anyway, but potentially doesn't aggregate correctly across their GSPs or their regions. So we're always looking to what's the most value we can get for the big guys and the small guys. And we win a lot of contracts where optimizer haven't looked at the full value stack. We're consistently looking at the full value stack. And the way we work with the clients is we typically offer shares of savings. So if we don't provide the value to the customer, then we don't get paid. So it's in our interest to make sure they get the highest value and the highest revenue from their sites.
Great. Well, on that note, I think I'll have to draw it to an end because we're over time. But thank you so much, Alex and Adam, today. Thanks, for your expertise. If there were any questions we didn't get through, I will pass them on to Adam and Alex, and they can get back to you privately after the event. And as I say, the slides and recording will be made available. But thank you so much for tuning in. And for latest news and views, go to theenergist.com.